No.
Well, I'll do that again. Good afternoon, and welcome to the fifth webinar in our Capital Readiness Resource Series. My name is Samuel Wiggins. I'm the CEO of Virginia Minority Chambers, the host of this series. We're a statewide 501c3 nonprofit organization with the mission of supporting minority chambers of commerce in the businesses they serve. We do this through advocacy, education, and programming, such as today's webinar. This series is focused on capital readiness because access to capital is the number one problem faced by small and disadvantaged businesses, especially new entrepreneurs. Our webinars will introduce you to the different funding opportunities available to your business and provide experts that will show you the path to success. Today, our presenter is Ford Scott. Mr. Scott is a Lender Relations Specialist with the Virginia District Office of the U.S. Small Business Administration, the SBA. We're all familiar with that. Ford is responsible for marketing and providing hands-on assistance with SBA loan guarantee programs to lenders, economic development organizations, and prospective small business borrowers throughout Virginia. He received a bachelor's degree in mathematical sciences from Virginia Commonwealth University. And the SBA, for those who don't know, is an agency of the federal government established in 1953 to aid, counsel, assist, and protect the interests of small business concerns, and to preserve free, competitive enterprise, and to maintain and strengthen the overall economy of our nation. Now, before I turn things over to Ford, a little housekeeping. If you have any questions during the course of the presentation, please feel free to hit your Q&A button and type it in, and they will either be answered during the presentation or immediately after. Also, you see that you have a reaction button. Feel free to show your appreciation at any time. Now, let's give a warm welcome and emotional reaction via your reaction button to Ford Scott.
Okay, thank you very much, Sam. I'm not going to stay on camera the whole time. Nobody wants to look at me, but I'm just going to wave to you, and I'm going to now share my screen. Sorry about that, how long that took. Okay, so as Sam said, we're going to talk about SBA lending programs today. After the presentation, you will receive what we call an SBA loan chart, which will outline our different lending programs. We do have programs going up to $5 million. SBA does not set a minimum. Many lenders will set a minimum, but we do not set a minimum for our loans. So first, I wanted to go over how our program works, what we offer and what we don't offer. So we do not offer any grants to start or grow a small business. We do not generally lend directly to small businesses except under our disaster lending programs. That's where if there's a flood or a tornado and there's a disaster declaration, you potentially could apply for a loan under that. So for the programs that we're going to talk about today, we provide a guarantee to commercial lenders, and that means that if you default, if the small business defaults, we will reimburse the lender for a portion of their loss. And that's our way to encourage lenders to lend to small businesses. Now, this says banks. We also have some credit unions that participate with us, so I should probably change that to say lenders. But anyway, that's our way to encourage them to lend. The guarantee that we provide to the lender can help offset some of their risk, again, to try to help them, try to increase lending to small businesses. So risk associated with startups, is insufficient collateral, maybe some non-standard repayment terms, and industries. I mean, you might hear some lenders are not big fans of, for instance, restaurants and some of the other industries, but if they have the guarantee, they might be willing to provide that financing. I did want to cover some ineligible types of small businesses and uses of proceeds. So the first one there, nonprofits are not eligible under any of these programs we're going to talk about today. The second bullet there comes up frequently. We get inquiries from people who want to start a business to buy houses, fix them up, and rent them out. Those are ineligible for all of these programs we're going to talk about today. So developers, landlords, if you're just buying a property and you're going to lease it out, those are ineligible. So apartment buildings, shopping centers, mobile home parks, things like that. Now, you'll see here it talks about nursing homes and assisted living facilities. Those are eligible for SBA financing as long as the business provides healthcare and or other medical services. So they're not just charging for room and board. They're providing healthcare services beyond that. Those are eligible. But if you had a facility, residential facility that isn't offering that, it would not be eligible. Businesses using a pyramid or multi-level sales distribution plan. The old example of that used to be Amway. Those are not eligible. Any business that is not legal or activity that's not legal on a federal, state, or local level is not eligible. So, for instance, in some states, marijuana is legal. If it's not legal on the federal level, so it's not eligible for our programs. You cannot have a business that restricts patronage for anything other than the capacity of the building, of the space. So, for example, you can't have men's only or women's only health clubs, things like that. If you have a business that's owned by someone who's currently incarcerated, that would make the request ineligible. If they're serving a sentence of imprisonment imposed upon adjudication of guilty, or they were under an indictment for a felony or a crime related to financial misconduct, then they are ineligible. We used to have a very involved process related to past criminal history. We got rid of all of that. So basically, you just look at this question on the application, which we will talk about in a minute. If you can answer that no, then you would be eligible. Prior loss to the government. So if you have if the business had a debt that they defaulted on and there was a loss to the government, so the debt had to be charged off due to non-payment, you would not be eligible for an SBA loan. And that also applies to the business and any guarantor that has a delinquent federal debt. It's currently delinquent. And then effective March 1st, we have a new policy related to the owners of the business. So our programs right now can only be used if the business is owned 100% by U.S. citizens or U.S. nationals. We used to allow legal permanent residents to be owners. We no longer allow that under SBA policy. So the next 3 slides provide an overview of our 3 main lending programs. This first one here, we call it our 7A loan program, which is just the code, the federal code that it was named for. So this program is, again, offered through lenders. We provide them a guarantee. It can be used for pretty much any legitimate business purpose. So you'll see here, you can acquire, refinance, or improve real estate and buildings. So that would allow you to either buy an existing building or construct a building. Again, we do not do non-owner occupied. They call it non-owner occupied transactions. So that would, we require that your business, if you're going to buy a property or construct a property, occupy at least 51% for an existing building and then 60% for new construction. You can use it for working capital, to refinance existing business debt, purchase and installation of machinery and equipment. You can buy furniture, fixtures, and supplies. We allow changes of ownership, business acquisitions, and in fact, we changed our policy recently where we even allow partial changes of ownership now. Franchise operations. So this is not something you have to worry about, but SBA publishes a franchise directory, and on that directory, we list franchises that we have reviewed and found to not be in conflict with our requirements, so that would make them eligible. It's the lender's responsibility to check that directory. I'm just mentioning it to you just to let you know that it's there. An example of a franchise that is not eligible for SBA financing, 7-Elevens are not eligible. And well, yeah, that's probably good enough explanation for that. As I said, the maximum loan amount is $5 million. We'll get into the documentation in a minute and what the lender will look for. Again, you'll get the loan chart after this presentation, and it's not up to you to understand all the ins and outs of these programs. It's the lender's responsibility. So we're just providing this to you so you know when you might be able to use an SBA loan if you need it. So you'll see here SBA Express loans, that's a subset of 7A. They go up to 500,000. But again, it's not your responsibility to know all those details. We're just mentioning it. The second main program is called the 504 program. It provides long-term fixed rate financing for major assets. So you see the third bullet there. It can only be used to either buy or construct a building, a commercial building, again, owner occupied, or it can be used for long-term machinery and equipment. That equipment has to have a useful life of at least 10 years, and it's generally is put in place and stays in place. The old example they used to give was a printing press. Probably not a good example for today, but you can't finance things like trucks. They call it rolling stock, things that move around under this program. Again, useful life of at least 10 years, and it's put in place and stays in place. The advantages to you as a small business owner of this program, they sometimes call this the 50-40-10 program. You'll have a commercial lender who will provide 50% of the financing that you need. SBA will generally come in behind them with 40%, and then on every 504 transaction, you'll see it here in bold, you will have to come to the table with a 10% cash injection. That is generally going to be much lower than what you would be required to inject if you got a conventional loan. The other benefit to you is that because we're involved, SBA is involved on that 40% piece, the interest rate is going to be lower than, again, what might be available conventionally. The third benefit to you is that some out-of-pocket costs, so closing costs, things like that, can be rolled into the project, so you don't have to pay them out of pocket at closing. So there are many benefits to the small business related to this program. And I did want to mention, so you see here at the bottom, you can't use this program for things like working capital inventory, things like that, but you can combine a 504 and a 7A together. And we see that often. We see that with changes of ownership. So the real estate will be financed to the 504 program, and the rest of it will be financed through the 7A program because the rest of it is not eligible under 504. You'll see the maximum loan amount. That maximum there is actually SBA's maximum. It's not what they call the maximum project size. There is no maximum project size. It's just our portion is limited to, goes up to 5.5 million. The third program is our SBA microloan program. I will mention right up front that each of these microlenders is assigned a territory. We do not currently have a microlender that covers the entire state, so we have only portions of the state that are covered. When you get this slide deck, you can click on the link there to see the microlenders and what areas they cover. I can tell you we have a hole. We're missing a microlender in the Hampton Roads area, and we're also missing a microlender in the Richmond area. We don't currently have a microlender covering those areas. We have one in Stanton that covers Augusta in that area. We have one in Abingdon that covers that area down there, and then up a section at the very top of the state. And then we have a lender in Charlottesville. They will lend in that Charlottesville area down into the south side portion of the state. And then there is a microlender that covers Prince William. I think they also cover Fauquier, Warren counties. But again, when you get the link, you can click on that and it'll give you that information. So the maximum loan size under this is $50,000. It can be used for working capital, inventory, supplies, furniture, fixtures, and machinery and equipment. It cannot be used to purchase real estate. And in order to refinance debt, you can do that if you can show that it will improve the debt position or cash flow of the business. So now we're going to talk about how you should prepare before you go to a lender. So we've been doing this with a separate partner, and they talk about preparation is key. How you present yourself to the lender, that's very important. So this will help you prepare and get ready before you approach a lender. So you see there the second bullet, we recommend that you either have a written loan proposal or a business plan. So the fourth bullet down here, I will send to the chamber, Sam and Tanya. I'll send them the slide deck that we prepared for that. So you can either prepare a loan proposal or a business plan. So you probably know a business plan. That's sort of the overarching document that talks about your entire business. For the loan proposal, that's a more streamlined document that focuses, as you can guess, on financing. So it's more streamlined than the business plan. But again, you can prepare either one. The lender will look at that proposal as evidence related to management. They'll want to know about your management experience, your understanding of the marketplace, and most important thing, of course, is the financial information that demonstrates your ability to repay the loan. So you see at the bottom here, before you approach any lender, we recommend that you have four things that you're able to address. So the first one there is how much money you need. Business lending does not work like mortgage lending or auto lending. I bought a car last year, and I went to my bank and I said, how much do I qualify for? And then they sent me a figure, and then I could determine, within that what I could buy. But business lending does not work that way. The lender that you approach for your small business financing is going to expect that you will come to the table with a dollar figure. So you don't ever go to a lender and say, how much can I get? Anything like that. That will not go over well. So they want you to come to the table with your dollar amount. And then you'll see the second bullet here. They want you to break that down. So let's say you're buying equipment or supplies or even real estate. They'll want to see that you have investigated that and determined that figure you're using is related to something that you've actually found. Get a cost quote from a equipment supplier. Real estate, you would work with an agent or someone that could provide that value. But they want to see a breakdown of the total financing, that you're looking for. The third bullet there is of course, you'll see there is very important to lenders. They want to see how you're going to repay the loan. We're going to talk about what you would need to provide to show that. And then the last bullet there is, what you will do if your business is unable to repay the loan. That's getting to collateral, and we're going to talk about collateral in a few minutes. What can be pledged that the lender could potentially liquidate if the loan is not repaid. So we're often asked about credit history, credit reports, and whether the lender will pull a copy of your personal credit report. And the answer is yes. Most, if not all, SBA lenders will pull a copy of your personal credit report, generally from every 20% or more owner of the business. You'll see there are three major credit bureaus on the personal side: Equifax, Experian, or TransUnion. Before you even start again to meet with a lender or contact a lender, we make the recommendation that you get a copy of your credit report, check it for errors, and then try to clean it up as best you can to make it as positive as you can before you approach the lender. You'll see that the third bullet here. I do this actually myself every year. You can get a free copy of your personal credit report from each of those three credit bureaus once per year. The report itself is free. They will not give you your score free. You'll have to pay the extra few dollars maybe for that. But the report itself is free, so you could check that to see what's on it. If you need help in repairing your credit history, you could contact a local credit counseling service. This State Corporation Commission publishes a list of credit counseling services, but it's up to you, of course, to do your due diligence to make sure you're working with a reputable credit counseling service. And then on the commercial side, not all lenders will pull a commercial credit report, but many of them will. And there are 3 bureaus. So you've got Dun & Bradstreet, Experian, and Equifax. These links, I believe these links will take you to some of these commercial credit reporting agencies will allow you to see what they have on your business, if they have anything. And then beyond that, they may want you to pay for things. So if you wanted to sign up for monitoring of your business credit report, you might have to pay for that. But I think just to see what is there is potentially free. But again, it's your choice if you pay for that extra service. We're not recommending it or not. So what a lender will look for when reviewing a business loan application, owners and operators of good character. So we just talked about credit history. That's one of the main ways they assess that is, have you been willing to meet your obligations when they were due? We talked about the feasible business plan. We're going to have at the end of the slide deck a list of SBA resource partners who can help you prepare that plan or review it for you. They can even look at your projections with you and make sure that they look reasonable. The lender will look for management expertise and commitment necessary for success. So that'll be either so if you're going to be the on-site manager, you're going to be there on a daily basis. They'll look at your experience. If you're going to hire a manager, you want to make sure that you put in your business plan or loan proposal the background of that hired management. Sufficient funds, including the SBA loan, to operate the business on a sound financial basis. Adequate equity invested in the business. So you'll see the next 2 bullets here talk about equity and collateral. An equity injection is not the same as collateral. So many lenders, and SBA actually requires this on startups, we require a minimum of a 10% cash injection for any startup. And that is actual cash that is contributed to the financing project that you're looking at. So they want to see that that's cash in. We get inquiries from small businesses and they say, well, I'll just put, let's say, $20,000 aside in my checking account, and if I need it, then I will invest it. Well, that's not sufficient. The lenders actually going to want to see that you've actually invested that cash into the project financing. And to compare that to collateral, so collateral is different. Collateral is an asset, property, whether it's commercial property, equipment, could be your accounts receivable, that is pledged to secure the loan that the lender will liquidate if the business defaults. They will liquidate that collateral and then apply it to the balance of the loan. So we get inquiries again related to collateral where, again, someone will say, the confusion between equity and collateral, they'll say, okay, I own a home and I have, let's say, $20,000 of equity in that home. Again, I'm just going to let that sit there and that will count as my equity injection. Again, that's not going to work because that is not liquid. It's not cash. That would help you on the collateral side. You could pledge that as collateral, but it's not going to help you with the equity injection. And then the last bullet here, the reason it's in red is we've mentioned this, I think, a couple of times already. The lender is mainly going to focus on the business's ability to repay. So that's either going to be shown based on historical business financial statements or projections. If you're a startup or the historical data does not show repayment ability. One common question that we get related to SBA loans, do you apply directly through SBA? The answer is no. You always apply through an SBA lender, and we're going to provide you a list of lenders plus another way to connect with lenders. We're going to provide you that in a minute. So SBA does not accept any applications here. It all goes to the lender. And then in terms of the paperwork, that's what we're going to cover next. It's going to outline what paperwork you'll need to provide to the lender. We can't cover everything here because your situation may be different from someone else's, but generally this will give you an idea of not only what SBA requires. I mean, there's a couple of SBA specific requirements, but the overall information is something that probably any lender will ask you to provide on a business loan. Okay, so now we're into the application requirements. So you'll see there is a borrower, an SBA borrower application. They call it a borrower information form, and you'll have this link when we send the slide deck. It's completed by the business, and then one person signs it on behalf of the applicant business. They're certifying to the information in it, saying it's true and correct. The lender will require from every 20% or more owner of the business to provide a personal financial statement. You'll see there for SBA's purposes, it cannot be older than 120 days. And the statement has to include the assets of the owner's spouse and any minor children. You'll see here, SBA has its own form. It's a Form 413. The lenders are not required to use that. But if you wanted to get an idea of what a lender will ask for related to a personal financial statement, you could look at that form. The next bullet is specific to SBA. So if the lender is charging you a non-SBA fee of greater than $2,500, there's a form that has to be filled out related to that. The lender is required to obtain federal business income tax transcripts. This is only on existing businesses, so we never ask the lender to get a copy of your personal income tax transcripts, only the business. But they get those transcripts for the last 3 years. This was put in place because years ago somebody tried to commit fraud on an SBA loan, so we want to make sure that the information that you're submitting to the IRS matches what you're giving to the lender, so they have to actually do that check and compare it. And then it also allows us to determine that your business is a small business, because we do not lend to large businesses. In addition to what I said on the previous slides, they'll also ask for business financial statements. If you have separate business financial statements, they'll ask for those statements for the last 3 years. As I mentioned a minute ago, if you're a startup, we will ask for a monthly cash flow projection for at least the first year, or until you're cash flow positive. The lender will ask for evidence of all licenses and formation documents required to operate the business. For example, a business license, articles of incorporation, organization, partnership agreements, etc. The next bullet here, you'll see my note at the bottom. So if you have this next list in your business plan, you don't have to prepare a separate document for this, but the lender will want to know the nature of the business, what industry you're in, length of time in business under current management, the depth of that management experience, either in the industry that you're in or related industry. So let's say you are starting a retail business, you don't necessarily have that experience, but you have experience running, managing or running someone else's business. You would definitely want to include that in your write-up to show that you have that past experience. And I mentioned if you're going to hire a manager, you want to talk about your management team when you're giving that information to the lender. We talked about business financial documentation. So I mentioned the 3 years of historical financial statements, either tax returns or financial statements. We also asked for an interim financial statement that's no older than 120 days. So if you're near the end of the year, like we're in March, what is that, 120? So you may not need to provide it if you're close to the end of the fiscal year or calendar year. But generally, we do require an interim financial statement that's no older than 120 days. And as I mentioned earlier, if the historical cash flow does not show sufficient debt service coverage, then the lender would ask you to provide projections, justifying, the reliance on, and they would rely on those projections. I mentioned the new business. We need the detailed projections. And I've given you a link here. This is actually to one of our resource partners' pages. They have many templates on this page, one of which is a month-to-month cash flow projection. So you can use that as your template. Again, as I mentioned, we're going to give you a list of SBA resource partners that you could go to if you need help with that. I talked about the equity injection a few minutes ago. You would discuss that in the information you give to the lender, any injection you're able to provide. I mentioned SBA's minimum, so we require a minimum of 10% on startups and some changes of ownership situations. We require 10%, but the lenders will set their own minimum. So we don't, as long as the lender isn't violating one of our rules, they're permitted to set their own equity injection amount. So you'll have to ask them what that figure is. If you're an existing business, you'll need a current debt schedule, which includes all the outstanding business debts, including any shareholder debt. And I will send you an example of that. You don't have to use our document, but it'll give you an idea of what the lender will ask you for related to that debt schedule. If you are refinancing debt, you will need to provide a copy of the promissory note and a payment schedule for each debt that's going to be refinanced. And you will be required to show that debt has been current for at least the last 12 months or the life of the loan. You'll need, if you're renting space for your business, you'll be asked to provide a copy of the lease. Just an FYI, for SBA lending programs, we generally require that lease, including any options to renew, at least equal the maturity that's being offered by the lender. So if the lender offers you a 10-year term to repay the loan, then your lease would have to, the term and the options to renew would have to at least equal that 10-year term. We talked about franchises, so you will be asked to provide to the lender a copy of the franchise agreement. There's also what is called a franchise disclosure document, and then any other documents that the franchisor is asking you to sign, you would submit those to the lender. If there are any federal, state, or local citations which would preclude the business from normal business operations, you need to outline that for the lender. You should discuss any liens, judgments, bankruptcy filings, or pending litigation, including divorce proceedings. And just a couple of comments on that. SBA does not have a hard and fast rule related to bankruptcy. So, in other words, that alone will not be a decline. What the lender's looking for there is, since the bankruptcy filing, they want to see that you've reestablished credit and that you have some sort of payment history on those debts since the bankruptcy filing. But again, we don't have a full stop on bankruptcy filings. So you would just give the information to the lender, explain what happened, and then be able to show that you've reestablished credit. Related to divorce proceedings, the recommendation there is that you wait until that divorce proceeding is finalized. The reason for that, especially on our larger loans, the lender is going to look at the assets that are being divided up in the divorce, and they need to know who's going to own what, so they can make an assessment in terms of collateral and things like that. So if it's not finalized, that can make it difficult for the lender to comply with our collateral policies. As I mentioned before, if you're buying equipment, inventory, or other assets, you would provide a detailed listing of what will be purchased and the cost quotes. Collateral, you would provide a detailed listing of all the business and personally held collateral to be offered. I can tell you on our smaller loans, we require the lender to look at business assets. We do not require the lender to take personally held real estate as collateral, but on our larger loans, which are over $350,000 up to the $5 million, we do ask the lender to look at that personally held real estate as collateral. If you're buying an existing business, you would need to provide a copy of the buy-sell agreement, a copy of, the second bullet here. So you would provide the buy-sell agreement. That's the terms and conditions of the sale. The second bullet here, a business valuation, that's just an FYI for you. you are not required to get a business valuation. The lender orders it, and it has to be addressed to the lender. And that's the purpose of the business valuation is to justify the purchase price. SBA will not finance any more than that valuation amount. So we require that the lender provide that valuation, again, to justify the purchase price. Pro forma balance sheet for the business being purchased as of the date of the transfer, showing what the assets and liabilities are. You will need to provide a copy of the seller's financial statements for the last 3 years, and then an interim statement that's no older than 120 days. And SBA has a general rule when we're talking about changes of ownership, and when you're buying a business, that it has to promote the sound development or preserve the existence of the small business. So we're not here to finance just, if you have a willing buyer and willing seller, we're looking for some sort of benefit to the business. So one example might be, let's say you have a business that's been run by someone for 30 years. If they did not sell the business, they would close it, and that's the justification here, preserving the existence. So there needs to be some reason, but the lender will look at that. You don't have to worry about that. If you're buying real estate, you'll need a copy of the signed purchase agreement. Again, this note here, it's not your responsibility, but SBA does require the lender to do an environmental investigation. Tanya, can you still hear me? Because I'm getting an unstable connection thing here. Yes, okay, you still hear me. So the lender has to comply with our environmental investigation policies. Again, you don't have to worry about any of that. That's just information for you. But there potentially could be a cost associated with that. And then just a note related to loan closing costs. So the lender is permitted to collect from you necessary out-of-pocket expenses such as filing or recording fees, photocopying, delivery charges, collateral, etc. We talked about the environmental investigation report. If you happen to be buying real estate, the lender will have to order a real estate appraisal. And then I mentioned if you're buying a business, they'll have that valuation, potentially that valuation cost. But again, it's not your responsibility to order an appraisal or any of that. The lender will do that. That's just to let you know that there will be a cost associated with that. This came up in another webinar. I didn't used to include this, but I've added it because we get questions. So with every SBA loan that is made, any person that owns at least 20% or more of the applicant business, they have to provide an unlimited full guarantee. And there might be some cases if you own less than 20%, but you're critical to the operation of the business, you potentially might have to guarantee the loan. But we were getting questions about what a personal guarantee is. And so I've added this slide. You'll see here, I've given you a link to the personal guarantee form. So you can actually look at our form. The lender doesn't have to use that form, but it'll just give you an idea of what a personal guarantee is. And then I've given you this link at the bottom it's not an SBA site. I hope I'm not getting myself in trouble, but it's an Investopedia site that talks about what a personal guarantee is and how it works. So the second program I mentioned earlier is the 504 loan program. We're not going to go slide by slide in terms of the documentation. It's going to be similar to what we already covered. But if you wanted to look at that yourself, you can click on this link when you get the slide deck, and I've outlined here the exhibits that you would need to provide to the certified development company that you're working with. Oh, by the way, I don't know if I mentioned this earlier, but if you are applying for a 504 loan, you work with a certified development company. So earlier in this slide deck, there was a link to those in Virginia. And you could, there are 3 of them, and you can contact any of them if you want to apply for a 504 loan. But you would submit your application to that certified development company. In terms of the microloans, each microlender will have their own documentation that they want to see from you. At a minimum, they will ask you to fill out an application and then ask you for documentation needed to be able for them to be able to assess your business operation and the funding that you need. But we don't have a checklist for the microloans. We've been asking lenders for a while now for some advice that they might give to small businesses that are applying for a loan. So we put together this list. We've already talked about the first one there. Review your credit reports and your credit score, clean up any errors and try to improve that score before you apply for the business loan. The next item here, get your business financial documentation in order. So ensure that your financial statements, tax records are well organized, accurate. And as we said before, you want to make sure that the information you've reported to the IRS matches what you give to the lender. You should also try to have a working knowledge of business financial statements, including what an income statement is and a balance sheet. And again, the resource partners that we're going to have later can help you with that understanding. And then many of them, as I have referenced before, they have links on their websites to explain, what an income statement is and a balance sheet. Related to projections, so they should be realistic and attainable. You should be able to outline for the lender what your assumptions were when you made those projections, what your related to your competition and your costs. Our resource partners, again, can help you with that to make sure that those assumptions seem reasonable. And then most lenders will use industry data to see if those projections are in line with industry averages. And they use this RMA data, and you can actually Google that and see that, explanation of that yourself. That's basically compiled financial statements for businesses that have applied for financing. It gives, like I said here, different metrics, gross and net profit margins and other business metrics that they look at to see if your projections are in line with that. And I've given you this link here this is one of our resource partners pages that talk about those financial metrics. One other piece of advice, actually two, we hear from lenders a lot. You would think with an SBA loan that the turnaround time is mainly based on SBA's turnaround time, but what we hear from lenders often is the business they go to apply for a loan, the lender gives you a checklist of what they need, you submit that information, but it's not complete, and so the lender gives you a list of some additional needed items. Let's say it has 5 items on it, and you send back only 2 of those items. You might think that the lender is going to move that application forward before they get all of those 5 items, but they won't. They will just put it aside and wait until all of the information is provided. So you just want to make sure that you send everything back. And of course, the faster you can do that and the more accurate it is, you won't have to have the back and forth with the lender. Now, I see my last bullet, it's out of order here. It shouldn't be under importance of complete applications. It should be a standalone bullet. But as we said earlier, lenders focus on cash flow. So you should too. So you want to show that you can repay the loan. And again, they'll be looking at your historical or projected financial information to determine that. So I mentioned earlier, we're going to provide you a list of lenders. So here's a link to our list. We maintain it on our local website. We try to have a contact at each lender that has some SBA knowledge. So you're not just we generally don't recommend that you go to, just any branch and, start talking about an SBA loan. If you can find someone on this list, and then I'm going to talk about another system in a minute that has some SBA background, that's better than wasting time with just someone at the local branch potentially. So in addition to the list I just showed you, we have a system called Lender Match. It's a way to connect potential borrowers with lenders. So every lender on this lender match system is an SBA lender. The way it works is you go to this site. Unfortunately, they do require a user ID and password to log in. But once you're in, you will answer a questionnaire about your business and the financing that you're needed. So they'll ask you, what type of business you're in, and then information about your financing need. And that will be sent to any lender who has signed up for your business location. And if they're interested, if the lender is interested in talking to you about that financing request, they will opt in, and then ultimately you will get a final list of all the lenders who've opted in, and then it's your decision, which ones you communicate with. So you see here on the slide, there is one caveat though. I mentioned every lender on this list is an SBA lender. However, what we see sometimes is the SBA lender potentially might refer you to a non-SBA partner. So maybe they have another lender they work with that is not an SBA lender and has non-SBA lending programs. I just give you, some caution there. If they refer you to one of those options and, let's say that lender, that non-SBA lender wants to charge you 30% interest rate, you'll see when you get our chart, we limit the maximum interest rate that can be charged on SBA loans. So you won't see 30% on any of our programs. But where those non-SBA options, you potentially might see very high interest rates or short maturities. So it's up to you to do your due diligence before you enter into any financing arrangements. I mean, it's your choice, of course, but that would not be an SBA option. I think this is maybe the next last slide, but I did want to mention this because this can help you in a couple of ways. We have on a weekly basis, I believe now, we post these SBA lending reports, and these reports can help you in a couple of ways. It can help you identify lenders who are most active in our territory. So the link above there is for our portion of the state. We cover all of Virginia except some Northern Virginia counties. If you happen to be in those Northern Virginia counties, we've also given you the link for that. But so it can help you identify which lenders are participating in SBA programs. The other thing is it has an average dollar size column, which could help you focus in on lenders that potentially are lending to, in those smaller dollar amounts. We have at least a couple of SBA lenders that lend here in Virginia that focus on those smaller dollar amounts. So I've mentioned this a couple of times. If you need help with writing a business plan, preparing a loan proposal, preparing your projections, pretty much any business need like that, we have resource partners. We've got small business development centers. We've got SCORE. We have a Veterans Business Outreach Center that covers the entire state of Virginia. They are in Norfolk, but they cover the entire state. And then we have a couple of women's business centers, one in Richmond and one in Norfolk. Actually, I think they're two technically in Norfolk, but you're welcome to reach out to any of those entities that to obtain assistance if you need it. And there's my contact information. You're welcome to contact me if you have any questions about what was covered today or SBA lending programs.
Well, Ford, thank you so much. We appreciate your time, energy, and the information you presented today. We do have a couple questions that were sent to me. People did not use the Q&A button. Not sure why, but I'm happy to present for them. The first is, question is, if I'm thinking about applying for an SBA loan later this year, what should I start doing now to prepare?
Well, I would say this slide deck, when you get it, will be a good resource. You could, in fact, just use this as a checklist and make sure that you have the information that I've outlined here. We've talked about making sure that your credit report is clean, clear of errors. Obviously keep your accounts current because you want to show the lender you're meeting that obligation. I would just say use the slide deck as a checklist of potentially what you might need. Um, yeah, that's what I would say on that.
Great. Another question we received was, how does one know when their business is ready for an SBA loan? What is there a milestone? Is there, I know you talked about criteria, but how would a small business or even an entrepreneur know?
So the key there, and you heard me say this when I talked about, uh, maybe I can put that slide up. The four items that you should have before you approach a lender. I don't know. Let's see if I can get that slide up there. Um, yeah. So I would say the basis for uh, being ready is when you have a need. Uh, if you're expanding, you need some equipment. You're hiring new employees, so you'll need some funds for that. It's basically a need basis. So I would say just in general, what we've outlined sort of how to get your documents in order, and you could do that, but it's more based on when you need the financing. Now, one thing I will tell you this, and we've we've asked lenders about this as well, because this is a piece of advice that you'll hear floating around. You'll hear that small businesses should try to establish some sort of relationship with a lender before they need the financing. So that that is what I would say on that is you may find differences when you go from lender to lender. There have been at least a couple of lenders I can think off the top of my head here in Virginia. We asked them directly that question because, you know, no offense to some of the larger banks, but they may not have the staff to, look at your like I said, your business plan and things like that, and give you some guidance on that. But some lenders, and they tend to be community banks, they may have some time to actually establish that relationship and look at your business information and give you some guidance there. But you can try that, and you may have to go to several lenders before you find a lender that's willing to do that. But uh, that's something that you may consider. They might, because they're looking at the banking relationship as a relationship. Some banks, they're just looking at the loan and they're not really looking beyond that. But um, some lenders, want to focus more on the relationship and keep you as a customer and try to help you as much as they can.
So, in that vein, would you consider, and this is my own question, would you consider like an SBA loan? Uh, I won't necessarily say easier, but a little more advantageous to apply for than a conventional, than just going straight to the bank or a bank.
That's a good question. I usually cover that. So the main benefit of SBA lending programs to a small business are that you are able to get a loan that the lender is not willing to make directly. In other words, make on a conventional basis. So with small business lending, you're first going to approach the lender and say, I would like to apply for a loan. You're not necessarily going to mention SBA, but then if they say, you know, they can't help you, and then they might outline some reasons. And we talked about, maybe it's a startup or something like that. You may say to the lender, well, do you make SBA loans? And then you can have a discussion with them about that. So that's the main benefit to our programs, is that you get a loan that the lender's unwilling to make otherwise. I already talked about another benefit under 504 where the interest rate potentially is lower and the term is longer on our piece of that. So, um, oh, and the way, so that was on the 504 side. Also on the 7A side, another potential benefit is, let's say you go to a lender and you say, I need some working capital. And the lender says, okay, well, I'll lend you that working capital, but I'm only going to give you a maturity of, let's say, 3 years or 2 years, something like that. SBA allows that lender to go out 10 years. We set maximum. So what you might the lender might be willing to extend that maturity out to a longer term, which would help you with your cash flow of the business, because you can stretch that payment out over a longer term. So those are the main benefits. But any small business is first going to start with the lender just asking for a conventional small business loan, and then you could move into the SBA loan programs if they're unwilling to make that loan conventionally. Because I have to tell you, I don't know if we covered this. I don't think we did, but SBA loans do have fees for the borrower. There's one fee for the borrower on the 7A side, and there's some fees on the 504 side. So if you can get a loan conventionally, you don't need to get the SBA loan. You're going to incur that fee. So that's another consideration.
That's good to know. I mean, most small businesses, they will take the path of least resistance. So
Right,
fee or no fee.
right.
And the last question, because we discussed this, what other topics do you cover that you talk about related to lending that might be of interest to small businesses?
So we've done webinars on establishing business credit. We also talk about personal credit in that same webinar. So we could do something like that. I've done webinars on just our lines of credit programs. We have several different types of lines of credit that we didn't talk about today that are available. I have done, although this might be more details than your audience wants, but I have done webinars on if you're going to buy a business and how that would work with SBA. Trying to think of what else. Those are the main ones that come to mind right off the top of my head. But and I've mentioned the resource partners several times. They, in addition to providing free one-on-one mentoring or counseling, they have their own workshops. Now, there might be a small fee related to that, but if you wanted, to hear more about financial statements, actually preparing the projections and things like that, you could find some webinars that they offer. Sam, I don't, you and I were connected to do this webinar today by the Virginia SBDC network.
Yes.
And they have their own, I don't know, I don't think you mentioned this fully in your introduction, but they have their own, I think they also call it Capital Readiness program, helping small businesses prepare. And in fact, I wish I had their slide deck, but
No, I actually can talk to that, because I do want to thank you for segueing into that, because we did this in collaboration. We got introduced to you actually by the Virginia Small Business Development Center. I know you work well with them, and they provide some great programming. One of the biggest ones is the Capital Pathways. It's a
that's it,
no-cost
yes.
program offered by SBDC of Virginia to help small businesses and nonprofits get the funding they need to grow. It's designed for very small, fewer than 10 employees, very small businesses, and emerging and growth-ready businesses and nonprofits that face challenges accessing traditional financing. And that's, SBDC has a great program that fits right in the needs of most of the small businesses, especially the small minority-owned businesses that our organization serves.
Yes. Yeah. So there are lots of resources that can help you, and I would encourage you to take advantage of as many as you like. Yeah. So
Oh, great. Well, hey, again, Ford, thank you so much. This has been wonderful. We appreciate you. And we hope to have you again on another webinar along with Virginia SBDC. I think the three of us can make a powerful impact on the information we provide to our demographic. And thank you, attendees, for attending. We really appreciate it. And as Ford said, don't hesitate to reach out to him for additional information on top of the information we'll be sending you. And please feel free to complete the survey that you'll see pop up when you sign off. A link to the survey will also be emailed to you along with the resources that Ford mentioned earlier. And also, since it's our final webinar, you also get a link to the videos. All of our webinars that we've hosted will be provided online. We'll see you a link to that so that you can access them at any time. So thank you again and take care.